Okay, guys, so thus far we have covered trend filtration using the moving averages on the higher time frames, monthly, weekly, daily, trading the break above the MAs, trading the break below the MAs, going into the wick rejections, how to deal with certain rejections of the MA. So it's more of a trend continuation move where we're jumping on and hopping onto the original trend, whereas the break above and below. We can use that to jump on the original trend. However, we can also use it to jump onto a reversal. So this video, I'm just going to go into further trend reversal constructs overall, because many people can often get confused. Let's say, for instance, now a currency pair is at one of the key levels of resistance, and a short opportunity has popped up, whether it be any kind of candle formation, looking at various rejections of a level, whatever it may be. So people can get confused with actually going short if the MA is up on the weekly and the daily, because people thinking, the rules are we have to go in line with the overall trend and so forth. Now this, I pulled the euro up here because, again, we went over this on the first video when euro was just hanging around this area of resistance. It broke above. MAs were up. I did mention on that first video that we're looking for further upside, a new high to be formed past this one. A few hours later, whilst I was still doing the videos, that euro actually came through. Now, as you can see, it's made its new high. If we just take away this for a second, we can also see that we spiked above, however, the body's closed below 1.1925. Everybody should have these key levels on anyway, if you are working with the euro. What can happen now? Euro can continue. The weekly time frame in particular is looking quite strong, as you can see. We've engulfed 1, 2, 3 weeks of price action. This is a nice continuation move. I am looking for euro to come a lot higher. We've got 1.2 next, and maybe even 1.2400. I'm really, really happy with the call because after this area of consolidation, after breaking above right here and the moving averages crossing over, my bias was long euro, and especially since it was a 3-year cycle since the last moving average crossover right over here. Now, what I want to go into is the reversals, and I did mention on the first video that we have 2 types of trades that we can enter. We obviously have breakouts. Breakouts could be a trend reversal, or breakout could be in the overall trend direction. But we have a trend reversal formation, and we also have a trend continuation. What we've gone through so far with the MAs, especially on video 1, a trend continuation, and that's what euro has been. It's been a trend continuation. Every time it's more or less pulled back to the moving averages, it's made a new higher low, or it's rested and found support and so on before catapulting back to the upside. Because the monthly's up, the daily's up, the weekly's up, sorry, and the daily, as you can see. Now, I also mentioned on the last 2 videos that once the price does get a little bit too far away from the moving averages, expect a pullback. So the MAs are quite far away on the euro at the moment. Something like this. So the market came all the way into these lows, and it was quite far away. If we look at the lower of the candlestick here, the closure, it was far away from the moving average, and we're kind of getting a similar scope here as well. Now euro has fulfilled 1.1925. As I say, the price is actually looking relatively strong to an upside and a continuation, but we have to take into consideration now that euro has, the euro has in fact made its new high. And you know what's after a new high, guys? A potential pullback, as this one made a new high, pulled back, made a higher low here on this form, 3 pin, 1, 2, 3. Now it's made its new high. A fresh week coming up as well. So we have to be vigilant of potential pullbacks. Now, due to the moving averages being up, this is the point I'm trying to get across here. The moving averages are up on monthly, weekly, daily. However, if the moving averages are all up and we're at a key level of resistance, preferably on monthly or a weekly level, a reversal can actually come through. And many students have actually been hesitant on taking these because they're too rigid with the rules, if that makes sense, and they're thinking a little bit too logical. Now, if the currency pair is about to pull back from this zone, let's say it does in the next few days, I will be monitoring this, there's nothing stopping us from now seeing, or after seeing that it's made its new high, it's at resistance, pullback is potentially imminent for around 100, maybe even 150 pips back to this support, perhaps, who knows. We can actually look for, I won't really do this on the daily, there's potential for reversals to now form. Let's just take into consideration this 4-hour time. Could potentially come back all the way down here. So if we only stuck to the rules of daily, weekly, monthly, all crossing the same direction, we're going to miss out on a few trades if the price is reversing at a key level, if that makes sense. So if this does reverse, we could maybe expect to pull back 100 up 150 pips depending on what we see around here. We can still take this trade short because on the higher time frames we've actually now put together that a high is being formed, we're at resistance, there is now potential for a pullback. Whereas on the other side of things, all of this, we were still expecting new highs for various levels. We had the Fibonacci going on as well there. So if I just put the fib on from lows up to the highs, fib targets coming in just under 1.2. I do believe we can maybe tap this Monday, Tuesday or Wednesday and then pull back, because after a fib level has been met, a pullback is generally imminent anyway. So anywhere around here now, I would be hesitant on going long around the euro. We've had so many opportunities for going long, but anywhere around this zone, we're looking for potential reversals and a pullback south. So we don't have to limit ourselves because we've just read we've read the market. We've got the fib there, fib extension target. We have the resistance, and we now wait for a potential reversal formation, ideally on a 4-hour time frame, or could even be a daily. But we also know a new high has been formed, and after a new high, we pull back as we did here. A new high, pull back. New high, pull back. So we don't have to limit ourselves in that way. If you wanted to be super conservative, you could maybe wait for the market to pull back on the daily to see if it will retest these moving averages again. But the more experience you get, I've had a lot of experience with the euro. I've been following it for quite some time. So the more experience you have with the currency pair, the more you get to know it. The more trust you have in the levels, and again, you're living this out day in, day out in order to perform the best you can possible on whichever currency pair you're focused on. So again, it comes down to chart time, and most of the decisions down the line are more discretionary based. So coming to the 4-hour, if we see a reversal around here, we can take this trade short, back maybe to the support 1 or support 2. Again, stop rules, if it's a simple candlestick reversal formation, we can implement the stop rules there, 15 to 30 pips above. Again, I'm going to cover that in further detail towards the end of the course and wrap that up. But yeah, my point is that we don't always have to limit ourselves to the direction of the daily and the weekly if a reversal is coming through. Obviously, on the first video in the members zone, I had a strong sense, and again a technical sense, and knowing that we are going to make a new high to this level. Why? Because again, we broke through the monthly resistance, 75% chance we're going to hit the weekly. This, even though it came very, very close to it, I know how accurate these key levels are, and I know how the market will respond to it, and now we've got that. Another example, let's have a look at the Aussie, for instance. So Aussie dollar, again, similar as euro, this was the last high low in the formation. I am now looking at 8100 being met. We've closed above the moving averages there as well. So because it's the weekend now, if that was a Tuesday close perhaps, that would be an entry long. Stops would be 15 to 30 below here, as we went through earlier on, and we would be looking at this high being taken out to make new highs. With that being said, what we would then potentially be looking at, because again, the MAs are going to be up on the daily and weekly. However, once it's fulfilled, it's touch at resistance and its new high, we are then expecting a pullback. So then, because of that knowing and that knowledge, we can look for reversals around here, because we're looking for the trend to reverse, if that makes sense. So a lot of the time, top-down analysis, we're looking at scopes of how far a currency pair can potentially go and run to. If it hasn't met that yet, and it's still showing us, fib moves, higher highs, higher lows, it's ready to make a new higher high, great, continue with that overall trend. But if it's at one of our key levels and we know we can trust these and have confidence in these levels, we can in fact go the opposite direction. That's the difference between the reversal and the trend continuation. So that's the potential there on the Aussie. What else can I see here as well? There's nothing really lining up there on the GBP JPY. I do want to find a bearish example though. Let me pull up GBP AUD, because this thing can start to pull back now, and I'll explain on a bearish example. Now, GA, one of my favored pairs. Been looking at shorts on this for a while. Right, so let's look at the trend formation. Lower swing high, lower low. Lower swing high, shooting star, lower low. It's made its new lower low. Now, I was monitoring the price because I do expect it to continue down to 1.6. However, after, the trend is very, very precise. The currency pairs are very precise. After a new low has been made, or a new high, there's a high likelihood the market is going to pull back. It's now made its new lows. We're kind of consolidating, reacting at 6,250 and then 6,200, so 50 pip range here. Boom, 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 boom. I've been watching this all week. The MAs, it keeps spiking to it. However, because it's made its new low now, it can pull back something like this. And this pair likes to pull back at an aggressive pace. So I'm expecting something like this. What does that mean? We could potentially come down into the lower time frames, i.e. the 4 hour, and take advantage of that because it is a few hundred pips. And because we're at such lows now, this has been swinging for so long. Can you see the MAs maybe crossing over on the 4 hour time frame there? Maybe get the 4 hour crossover on the the MA crossover on the 4 hour time frame, sorry, and we can maybe come up to support at resistance 1, maybe even back up to 6.5. Who knows? So we don't always have to limit ourselves. If we know, okay, a new low has been made, I'm looking for a pullback. And again, it's just about how much experience you have with this and solidifying the earlier rules of going through, once you've placed on the key levels, monthly, weekly, daily, maybe some trend lines in there as well to get the overall trend direction, looking at the MAs. If you know that, okay, this market has now made a new lower low, if you have marked on your high highs and lower lows properly using the daily time frame and then the 4 hour time frame, after experience, you can say, you know what, this can pull back. Look at the scope here, 6,218, 638. We're looking at nearly 200 pips, just shy of 200 pips. So we can take advantage of that as well. It can make a new lower high here, or maybe even here, and then continue the overall trend direction once more. It's about knowing the pairs and continuing to go over the same routines every single day, making everything easy on yourself and making analysis as pristine as possible. So I hope that helps. What's really great for the trend reversals, is the 4 hour time frame, the 4 hour crossovers. To just confirm. So what I mean by that, if we're at support or resistance or made a new lower low or lower high, if the MAs are still in the direction as the previous prevailing trend, and we want to go against that now because we're looking for a pullback, a reversal, the best time frame to operate on is the 4 hour. You can maybe see if you can find any box regions as so. And for that extra confirmation, if you are looking for that reversal, wait until the 4 hour moving averages are crossed over, so the blue has crossed the red. So if this blue moving average crosses the red to the upside, then that's extra confirmation that this thing can start to go the opposite direction. So just bear that in mind. Just go back in the video, take some notes. Any trend reversals at key levels of support and resistance after new highs or lows have been formed, revert to the 4 hour time frame. See if you can find any simple box breakouts out, because it might consolidate for a while. And look at and focus primarily on the 4 hour moving averages. So I hope that helps. Have a play around yourself. If you just stick to the 4 hour, you make everything so simple. Now I'm going to go on to the summary video and summarize everything we've gone over and maybe add a few other things in there as well. Thank you.